Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 24th, 2012. We have a lot to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Right now, what we have is, I keep doing that. Right now, what we have is a down move here. And basically, we're just consolidating. As you can see, if we take a little bit a closer look here, we have this resistance line here, and we just keep on bouncing into this resistance line. Today we closed a little higher. We definitely closed higher than yesterday. We have a higher high and definitely a higher low. So that looks a little bit positive for tomorrow. We're also in an oversold condition. But keep in mind, there is a possibility that we may actually rally into the 135.72 level. Either that or we just trade sideways and then break down. Okay, I'm still overall bearish, but short term, either we go sideways or we head higher. Okay. I just want you to remember that again, because we are in a downtrend, you want to follow the trend. The trend is your friend. You do not want to trade counter trend unless you're in and out very quickly, and you have to make sure that you are absolutely sure that the trade will go in the direction, or if you took a long position, that it'll go in the direction that you expect it to. And of course, if that long position doesn't work out, then you immediately stop out. Okay. This is a chart of the US dollar. In the previous video, we said we had this, this resistance point here. We bounced off, we broke through it, and then now, don't mind this candle here. This candle was yesterday. This candle is actually today's candle, just the after-hour trading. We do have a possibility that we might head up this area here. However, again, there is a possibility that we may retest this support line here before we get a bounce higher. If we do retest this support line due to the low volume in the markets and because of this upcoming holiday Monday, then we should see a little bit of a bounce in the markets tomorrow. If not, however, keep an eye on the dollar, because if the dollar shoots up tomorrow, then we'll definitely have more downside in the markets. So now we have the VIX. I actually had created a calculated level here at 29.35. Again, with the VIX, we broke out of this trend line, 50% retrace, came up, consolidated, came up into the, this is pretty much close to the 200 moving average. Nothing is perfect. Obviously, we came down into the 20 moving average, came back up into the 200 moving average, and now we're back down. So we're just basically zigzagging in this VIX area, and the reason is the VIX is the fear index. Okay, so what I'm seeing overall, even though in the micro standpoint, if you look at it in a bigger as a bigger pattern, we're just consolidating bullishly. Okay, so if we actually pop through and break through this 200 moving average, which this is definitely possible because we are consolidating, then we can pop through this 200 moving average and get to this 29.35 level. How long would it take to do that is the question. And then because we're in the holiday season, obviously, again, Monday and Friday are low volumes, including holidays and day after holidays and day before holidays. Low volume gives the institutions a chance to prop the markets higher. And when you're dealing with low volume, it's just harder to short a stock. Okay, but this is definitely something to keep your eye on. Right now we still have problems in Europe, and so at any time fear can pop up, and if fear pops up, obviously the VIX is inverse to the markets as well as the dollar, so the market should see a drop as the VIX goes higher. Okay, let's take a quick look at gold. We had this calculated level up here. We didn't quite get there, but we turned over, we came back down, and we retested this calculated level here, and then now we're heading back higher. We did close negative 21 cents, but that's really minor compared to the volatility of what gold is doing right now. From what I can tell, gold is definitely doing this sideways consolidation pattern, and we may break lower after that. I do have another level of gold. I didn't put it into this chart. Let me see if I can load it up here. There we go. 141.52 is the next level down. Okay. If we do pop, however, I'm still expecting a pop into the 156.32. However, because we got so close to this level already, there is a possibility that we can get up to this level of 162.22. Again, my levels only work with a higher percentage rate on the first run. Okay, after that it gets a little weaker each time it hits. Therefore, I will not short if it hits this 156.32, but I probably short if it ever gets to 162.22. Okay. Speaking of gold, this is a chart of ABX. ABX, yesterday I had a video on this being a level too short, and also this is the next level higher, and also that it would be coming into this 50 moving average. If we zoom in here, you can obviously see that ABX went right into this 50 moving average almost to the T. If we had shorted, I did not actually take this trade, but if you had shorted ABX at this $40.12 level, we definitely would be sitting pretty right now with a break-even stop. Volume does look good for a reversal, so we actually may pull back a little bit. But we do have support at this 20 moving average. It's going to be very minor support, okay? So the next support that I can see is back to a double bottom retest of this calculated line here, all right? Another thing I talked about in last night's video was Intel. Intel came right down right into this calculated level, as well as this 200 moving average. As you can see, it's just right in there. And I said, if I was gonna go long in this stock, then I would at least take it at the 50% level or a little lower, because my stop would obviously be under the 200 moving average. So you want your stop to be as close to as possible, so you don't lose as much money. As you can see today, we barely came to this 50% level. So my trigger was right here, right in this 50% area. It did not make it there. It came close, but it didn't make it there. And then we shot up, and we're up about 21 cents with an ATR of 58 cents. That's pretty good. Okay. That's Intel. Intel is off the table. If it comes back down into 50% area, this trade is dead to me right now. We've already tagged this level over here again. Levels only work once, in my opinion. So the next thing that I would do is a short to 20 moving average if it ever gets there. Okay. The next thing I wanted to show you was 2 videos ago. If you take a look at it, I did a analysis on FB towards the end of the video, and I wanted to this was just a test. Actually, I didn't actually do any trades on here, but I wanted to see if the mathematical calculation, or I guess I'm going to call it a MC level now for mathematical calculated level, would hold up with just 3 days of data. Okay, so after 3 days, 1, 2, 3, so looking at the 10-minute chart, we have 1 day, 2 day, 3 days. I entered in the calculation, and it drew this line right here. And then it was $30.97, and then 28.79 and 26.18. And I said, if we ever get a bounce here, or here, then these levels actually does work, even though we only had 3 days of data. Just look back 2 videos ago, and you'll see it's just perfect. Right on. Look at that. I mean, this calculated level, boom, right on it to the penny. And then we got a bounce off of Facebook. Okay, so now we were at 30.97. We're currently at 33.02. That's a $2 increase in just a couple of days. And this is your 7-minute market update. God bless to you all. Thank you for watching, and we'll see you in the next video.